best way to resolve any problem, both in trading and sometime in life, is to find the root cause. In the forex market, one of the biggest problems we are all facing is emotion. Emotion is what led us to take reckless trades. We risk recklessly, we chase trade, we break arrows, and eventually we blow our accounts. And in this video, I want to walk you through some of the key emotional triggers that many traders, including myself, had experienced. These triggers, once you identify them, you will start to understand why you react the way you do in the market. So by the end of this video, you'll be able to spot this emotional trigger clearly and begin to take control over them. Because when you can't identify your emotional pattern, what trigger you to get emotional in the forex market, you may not be able to manage them. The first solution to solving your emotional challenges is to identify what triggered the emotions. And when you're able to do that, it will be easier for you to manage them. And when you can manage them, you become more disciplined, more consistent, and a far better trader. Over the years, personally, I've had a lot of triggers that caused me to get emotional while trading. So I'm going to share my experience with you. This will help you build awareness and build more confidence in your trading decision. So let's quickly dive in. The number one emotional triggers from experience is when I break my trading rules. Anytime I break my trading rules, I always feel angry, especially if the trade becomes a loss. It hurts me, it makes me feel angry. You will agree with me that majority of traders have rules they follow, but very few stick to these trading rules. How many of you had trading rules? You've written a lot of rules. You say you will never take trade when there's no setup, but oftentimes you keep on forcing trades. And whenever you take this decision, you made these mistakes, how did you feel? You oftentimes feel bad. You feel angry. These are all emotional reactions to one particular action, breaking your own trading rules. And sometimes we don't even know when, we don't even realize when we break our trading rules, especially when you're in the battlefield of trading. So here's the thing, when you break your rules and the trade ends in a loss, it hits harder. It does not just affect your account, it's also going to affect your mind. You get angry, sometimes you start doubting yourself. And before you know it, this emotional reaction leads you to take more bad decisions. Maybe sometimes you may end up taking another trade just to recover the previous loss. So sir, if you want to resolve some of your emotional reaction, you must learn to stick to your rules. It is very important. Stick to your trading rules. Don't break them. You must learn to stick to your trading rules. Respect your rules. Go back, review them, and commit to them, because your rules are there to protect you from yourself. You set these rules to protect you from yourself. You must learn to stick to them. You must learn to respect them. They are important. Do not break them. Number two things that trigger me to get emotional is when I risk too much on a single trade. The truth is this: the more the risk, the more likely you will become emotional, especially when the risk is higher than what you projected for. Let's take for instance, your normal risk is 2% per trade, but because you are having some winning streak, you become overconfident and you decided to risk 10% per trade. If this particular trade is moving in a loss, you're going to have challenges trying to manage the trade, where most time you end up either closing the trade too early or getting panic. And if eventually that trade hits stop loss, it's going to affect you. So trader, be careful with how much you are risking per trade. Make sure the risk is within your plan and your risk tolerance. Here's the truth: the moment you over risk, your brain switch from strategy to survival mode. The moment you over risk, your brain is no longer about strategy, it's now what? Survival mode. You either start to watch every candlestick that is moving up and down, hoping that it turns in your favor. So there will be pressure on you and you become to get emotional. The pressure alone is enough to make you close the trade too early, or even worse, hold on to a bad trade because you can't afford to lose it. This is why you have to be careful. Now, if you check very well now, what causes that emotion is because of your actions. You risk beyond your risk tolerance and above your predefined risk or your acceptable level of risk. So if you want to be more consistent in your trading, only risk what you are emotionally comfortable with losing. So if you want to stay in control of your emotion, you have to get to stay in control financially. When your risk is balanced, it is easier to let trade play out without the fear taking over. These are the key things. Because the emotion that will come when you take high risk is fear, panic, and it's going to distort your trading. Then number 3 emotional trigger that I've experienced is when I chase trade. Anytime I chase trade, I often experience this emotion. And why is it so? Let's put it this way. Let's take, for instance, the previous trade. You were waiting for the trade to get to a particular level. Let's say this level. You want this trade to get to this very point. The market could not get to that point, and the market move in your predefined direction without you. Our brain next time, when a similar pattern happen, will tell you to take the trade without waiting for the actual confirmation. And you know what happened? This time around, you took it. Instead of the market doing what it did last time, the market will go against you and take you out first. Such actions are going to make you get emotional. That fear of missing out, because the reason you are doing this, the reason you are chasing trades, because you are scared of missing out. You don't want to miss any opportunity, because the last time you miss opportunity. Okay, let's look at it this way. You wanted to jump in now. Usually you always wait for stop ons, but the last time you waited for stop on, there was no stop on, and the market was just moving without you. And this time around, you say, no way, I must not wait for stop ons. I must not wait for stop ons. I must jump into this market. And the moment you jump in right here, what happened? The market move against you, take you out before it started moving in your favor. What will happen to you? You're going to get angry. And most time, you're going to re-enter another trade. And sometimes, you're going to end up forcing trade. And you're going to hit stop loss again. So that the fear of missing out push you to jump in late or push you to jump in too early without confirmation. Because you are not entry based on logic or based on your setup anymore. You are entry based on what? Emotion. And you enter the wrong place. Sometimes it is either you are jumping in too early or you are jumping in too late. And when this happens, what happened to you? With no proper risk management, more often than not, the market reverses right after you enter. Now you are trapped. What happened? You get angry at yourself. And oftentimes, after you hit the loss, you want to re-enter again to recover back that loss. To handle this situation that leads to emotion, we must train ourselves to be okay with missed opportunity. The market is always there. But the moment you let this, I want to enter, I don't want to miss out, you're going to lose your edge as a trader. Many of us, our action is why we are losing our edge. Which actually, technically, we have an edge. Sometimes the edge that is missing is just how we manage ourselves. So trader, what is your emotional trigger? What is the trigger that caused you to either get angry, made mistakes in the forex market? What are the emotional triggers? Let's talk about the fourth one. The fourth one is hesitation. The moment you hesitate and miss opportunity. How is this, and how does hesitation cause you to get emotional? Let's put it this way. Let's take, for instance, you're supposed to take a trade right here, right at this very point. Okay? You're supposed to take a trade here, and then your mind is telling you, because the last trade you took, even if you do it based on your strategy, it hits a stop loss. So your mind starts telling you, no, I'm not going to take this trade now. I don't know if market maker will see stop on this market. I don't know if there's still going to be liquidity grab. And you were hesitating. And right after you could not enter, you see the market moving your direction. What will happen to you? You're going to feel bad. And you're going to get angry. Why? The opportunity was right there. You could not take it. So that's hesitation. The moment right there, you could not take it. because you were second guessing yourself. You waited too long. Then the trade take off without you. Your strategy is telling you this is a buy, but because over the past 2-3 trades you were making losses, you were scared of making another loss, you hesitated. And this time around, this specific trade will give you all the profit you are looking for to recover the previous loss. The solution to this kind of actions that lead to emotions is stick to your plan. Anytime your trade setups, your strategy tell you take a buy. As long as you have a checklist and you discover the setup align with your plan, take it. Because actually you're not going to know what is going to happen in the market. You don't know what the result is going to be like. You don't know if it's going to be a win or a loss. You just have to consistently take that trade. Whether it's going to be a win, whether it's going to be a loss, you don't know. You just have to take it. If the market is telling you, take this buy, you just have to do what? Take it. Because if you don't take it and you see the market move your direction, what follows is that you're going to get angry. There's going to be emotional reaction. You will get angry at yourself. You feel regret. That regret will push you to do something even worse, like jumping into another trade that was not part of your plan, just to make up for the one you missed because you do what? Hesitated. Hesitation usually comes from fear. Most of the time, from my experience, I've learned that it usually comes from fear of losing or fear of being wrong. But the best way to deal with it is by trusting your process. Just trust your process. Trust that process. If the setup meets your rules, execute it. You don't have to know what the outcome will be. You will never know. It is all about probability. This business is about probability. It is not about perfection. You're going to miss opportunity. It's always going to happen. You're going to be wrong. It's always going to happen. But how you respond to them is what matters. How you respond to them is what will shape your trading results. So the next one is greed. Number 5 is greed. This emotional trigger hits very hard. In the course of trading, there's something that I've always done in the past, which beginner traders often do: extending your take profit. Extending your take profit too far. It's okay to make goods hour. At least most of your gurus tells you to make 1 to 10. But the honest truth is this: it's a good advice, but most of them, they are not realistic. The more they reward to risk, most time, the lower your accuracy. There was a particular day I was trading and I was up on a specific trade by a risk to reward 1 to 5. Because the market moved very fast, it was just within 30 minutes, I hit 1 to 5 risk to reward. I felt greedy. I thought to myself, there's a need for me to allow this market to run more so that I can make more, because I feel the momentum is there. And it's just similar to this chart here, but this is different, not the same chart. You know what happened? The market gets to the 1 to 5. I extended my TP, my take profits, to 1 to 10, and just few minutes later, the market started reversing. I thought to myself, this is just a pullback. It's going to continue the trend. As I keep on waiting, I see the market coming down. Something in me was telling me the market is just a pullback. It's going to go up again. And after a few hours, everything, all the 5 hours went away. So this made me to get angry that very day. And you know what I did? I was now looking for another opportunity to make back that profit I just missed. And at the end of the day, I lose more money. I got angry. So if you check very well, what triggered that emotion was because I was greedy. Stick to your plan. Both your stop loss, both your take profit. If you're in a profit and the trade is going where everything look good, and then you start thinking, what if it keep going up? You move your stop loss further, hoping for more, and then boom, the market reverse. All the profit is gone, and sometimes it does not just wipe the profit, it hits your stop loss. This is a very painful event. And you know what it did? It creates frustration. It makes you get angry. It makes you blame yourself, and it creates emotional reaction. Very few will be able to handle this situation very well. Some may want to jump into another trade and lose more money. So pay attention to the actions you are taking that trigger what? emotion. And one of these actions that trigger emotions is greed. Greed makes you to forget your plan. It makes you to ignore your exit strategy. And worst of all, it convinces you that the market owes you more. So, sir, you need to stick to your plan. I've learned in the hard way, a good trade is not just about entering, but it's about knowing when to get at. You don't need to get all the moves. Just get something from the ocean and get at. Someday the market will give you one, but don't let this trick you into thinking that you need to wait for the market to give you so much every time. Don't let anyone tell you that until you make a risk to reward 1 to 10, you are not doing well. Sir, it's possible to do much better when your risk to reward is even 1 to 2 or 1 to 1.5. That's someone who has just 20% win rate, hoping to have 1 to 10. What they don't share with you is the reality of the business. Most of these guys telling you have to hold your trade from 1 to 10, you are 1 to 5, 1 to 6. They don't tell you how many times their trades that moves in good profits come back to reverse and hit their stop loss. Do you have that capacity to manage your emotion? If you don't, there's a need to stick to your plan that works for you. The number 6 emotional trigger is staring at your chart for too long, especially for those who don't have other jobs and you are a full-time trader. For especially beginners who believe they are full-time trader, they don't have much job they are doing. Anytime you sit at the front of your screen for too long, you may end up forcing trade. You need to have a system that allow you to do something else. Create alerts, know your level, allow the market to come to you. But if you are always on the screen, looking at the markets, maybe you are looking for a trade, just want to watch the market moving, you are most likely going to make mistake and frustrate. The longer you stare at your screen, the more emotional you become. And sometimes you overanalyze. You begin to doubt your setups. You will become impatient. You see patterns that are not there in your setups. The urge to interfere with your trades grows stronger. So, sir, one of the reasons you are getting emotional is because you are too glued to your screen. Plan how or when you will look at your charts. For instance, you wake up in the morning after your meditation, after all your morning routine, just take few minutes or an hour to check for setups. Mark your levels. The market will always create level. Mark down those levels and set alerts. So the alert will tell you when the market comes to your level. You don't need to be on the screen for hours, 6 hours you are still waiting for trade. You're most likely going to frustrate, and this will trigger emotions, and this will make you make more bad decisions. The solution is to step away. Once your trade is placed based on your plan, walk away. Have a clear routine that stops you from becoming too obsessed with every move. The market is never going to move in a straight line. So do not expect, because I took a trade now, you expect the market to just move. You are praying, oh, this market move. You can't push the market to move. You cannot. Mark your level and allow the market to do its work. Take a step back. The number 7 emotional trigger that I've also experienced is trying to make back a loss immediately. And this is called revenge trading. Revenge trading is something that causes you to become emotional, because you're going to end up taking trades that are not within your plan. The best approach is to take a moment to reflect on why the market hit your loss. This either is part of your edge, especially if you stick to your plan. It's okay, it's a good loss. But don't try to make back a loss immediately. It's a very bad way of trading. Don't try to make it back immediately. It's a bad habit that is going to affect you in the long term. Only do that when the next setup aligns with your strategy. Do not force the next trade. Most of the time, you will enter a rush or emotional trade, usually no clear edge. And when the trade also ends in a loss, the emotion pushes you to jump into another trade. So if you want to be consistently profitable, you must identify whatever causes you to get angry, frustrated, and make irrational decisions. If you ever experience any of these in your trading, please let me know on the comment section. And guys, please do not forget to subscribe to our channel. A lot of videos and strategies will be shared in this channel, and we're going to make sure you become consistently profitable in the business.